The Federal Reserve just delivered its final rate cut of the year, a 25 basis point drop, bringing the federal funds rate down to a range of 3.5% to 3.75%. Markets expected this move, so reactions were pretty calm, but three things still caught everyone off guard. First, surprise, even after the cut, Trump wasn't happy. He said 25 basis points was too little, hinting that the Fed should have gone bigger. Of course, he's also building momentum to replace the Fed chair. Trump has always been a master at shaping the narrative. Second, surprise, the vote was unusually divided. Out of 12 Fed members, 9 voted yes and 3 voted no, the most dissent since 2019. Here's the twist. One member thought the cut was too small and wanted a 50-point cut. 2 others said the Fed shouldn't cut at all. In short, even inside the Fed, opinions are splitting. Third, surprise, Jerome Powell went dovish. People expected him to stay tough, maybe signal nothing about 2026, and keep a hawkish tone. But both in the official statement and in the press conference, Powell sounded surprisingly soft. What was supposed to be a hawkish cut turned into a very loud dovish message. Now to the big questions this cut leaves behind. Question 1. Was this Powell's last rate cut ever? His term ends in May 2026. Trump is almost guaranteed not to appoint him. He's criticized Powell for years, and Powell is stuck between rising inflation and weakening employment, a brutal combo. Some analysts think he might not cut again before he leaves office. Question 2. Will a shadow Fed chair influence policy before Powell is gone? Trump's favorite pick is Kevin Hassett, and once he's nominated, markets will treat him like the next chair, meaning his words may start shaping policy early. Question 3. Will the Fed's independence be damaged? That's the real concern. The Fed's independence is the foundation of trust in the U.S. dollar and U.S. Treasury markets. If that independence is questioned, the impact could be huge and not in a good way. Finally, a not so mysterious question: will China cut rates this month? Probably not. While the U.S. has cut 75 basis points this year, China only cut 10. China says policy is supportive, but actual moves look cautious. Concerns include bank margins, capital outflow risks, and the RMB exchange rate. But without rate cuts, how do you send a clear pro-growth signal? With the dollar weakening, China actually has a good window to move. My view: China should cut, especially now. Sometimes, lowering rates isn't just policy, it's a message.